Good day, everyone. My name is RENZ, LACERNA, and what we're doing today is we're going to discuss the answers of monthly long exercises 2. Um, this particular problem. Uh, the monthly long exercises 2, and okay, so let's begin. So for the first part, where of our answers, we have adjusting entries, audit adjusting entries, and we're going to discuss all of our answers today. So first one is number 1. Account of the petty cash fund on January 2, 2019 showed its composition as follows: currency and coins 6,000, petty cash vouchers all dated 2018 except for 1,500 which pertains to 2019, 6,000. Employees post dated check 3,000 for a total of 15,000 pesos. And for our adjusting entries, for number 1, we have debit advances to officers and employees 3,000, and marketing and administrative expense 4,500. And on the credit side, we have petty cash 7,500. So for number 2, we have letter A, B, and E for adjustments for number 2. Letter A, customer's check returned by the bank marked DAIF in December 2018 redeposited in January 2019 3,500 35,000 pesos. For our adjustments, we have accounts receivable 35,000 on the debit side, and cash in bank on the credit side 35,000 pesos. For letter B, a bank credit memo representing collection by bank from one of the company's major customers 40,000. So adjusting entries, debit cash in bank 40,000 pesos, and credit accounts receivable 40,000 pesos. So for letter E, the company wrote several checks at the end of 2018 for accounts payable that were held and not mailed until January 15, 2019. These totaled 48,300 and were included in the outstanding checks of December 31, 2018. So for our adjusting entry, debit cash in bank and credit accounts payable 48,300 pesos. So for the number 3, the trading securities portfolio of Carkets Corporation contained the securities listed below. So we are in this number 3. So the trading securities portfolio of Carkets Corporation contained the securities listed below. Smart Core ordinary shares cost 70,000 for December 31, 2017 to December 31, 2018, 40,000. And the Globe Corporation ordinary shares 100,000, Nokia Company ordinary shares 210, and so on and so forth. So for our adjusting entries, we have debit trading securities 20,000 pesos and unrealized gain on trading securities on the credit side 20,000 pesos. So for the number 4, the audit revealed that accounts receivable was composed of the following items. So customer's account 2,799,000, advances to officers and employees 120,000, selling price of merchandise sent to Mobilin on consignment or at 125% of cost and not yet sold by Mobilin Corp 625,000 for a total of 3,544,000. So for adjusting entries in problem number 4 is debit advances to officers and employees 120,000, and the credit side accounts receivable 120,000. And for letter B, sales debit 625,000 and inventories 500,000, and on the credit side accounts receivable 625,000 and cost of goods sold 500,000. And lastly, for number 4 is marketing and administrative expense 17,900, and on the debit side allowance for uncollectible accounts 17,900. So number 5, inventories. So a physical inventory of merchandise as of December 31, 2018 amounted to 4,398,900. The following information has been found relating to certain inventory transactions. So we have multiple adjusting entries for number 5, A, B, C, D, E. So letter A, 35,000 shipment of goods to a customer on December 31, 2018. Terms FOB destination was not included in the year-end inventory. The goods cost 26,000 and were received by the customer on January 8, 2019. The sale was properly recorded in 2019. So for our adjustment on the problem is letter A, for on the debit side inventories 26,000 and on the credit side cost of goods sold 26,000. So for letter B, an invoice for goods costing 35,000 was received and recorded as a purchase on December 31, 2018. The related goods shipped FOB destination were received on January 2, 2019 and thus were not included in the physical inventory. So for our adjustments in letter B, in the number 5, debit accounts payable 35,000 and credit cost of goods sold 35,000. So letter C, goods costing 27,000 were received from a vendor on January 5, 2019. The related invoice was received and recorded on January 12, 2019. The goods were shipped on December 31, 2018. Terms FOB shipping point. So for our journal entry in letter C, we have debit inventories 27,000 pesos and the credit accounts payable 27,000. So letter D, inventory cut-offs test indicate that 22,350 of inventory received on December 30, 2018 was recorded as purchases and accounts payable in 2019. These items were included in the inventory count at year end. So adjusting entries, letter D, cost of goods sold, debit side 22,350, credit side accounts payable 22,350. And last, for number 5, letter E, inventory cut-off tests indicate several sales invoices recorded in 2018 for goods that were shipped in early 2019. The goods were not included in inventory but were set aside in a separate shipping area. The total amount of these shipments was 36,000. Cost is 25,000. So for our journal entry in letter E, number 5 is debit side sales 36,000 pesos, inventories 25,000, and on the credit side accounts receivable 36,000 and cost of goods sold 25,000. So number 6, the prepaid insurance account contains the premium costs of two policies. Policy A, cost of 13,200, 2-year term taken on September 1, 2018. Policy B, cost of 16,200, 3-year term taken on April 1, 2018. Adjusting entries, marketing and administrative expense 6,250, prepaid insurance 6,250. So number 7, the property, plant and equipment account on the company is composed of the following: land and building 8,600,000, furniture and fixtures 2,177,000. Leasehold improvements 168,000 for a total of 10,945,000. So at the beginning of 2018, the company purchased land and building for 8,600,000, which included 180,000 of realty tax in arrears for prior years. A mortgage of 2 million pesos was assumed by the company on the purchase. 20% of the purchase price should be allocated to the land and the balance to the building. In order to make the building suitable for the use of the company, remodeling costs in the amount of 900,000 were incurred, and this was charged to repairs and maintenance expense, such remodeling necessities demolition of a portion of the building, which resulted in recovery of salvage materials sold for 30,000 cash and recorded as scrap income. No depreciation has been recognized on the building for 2018, which has an estimated useful life of 50 years and salvage value of 250,000 pesos. So on May 1, 2018, cost of 168 pesos were incurred and improved leased office premises. The leasehold improvements have a useful life of 8 years. The related lease, which terminates on December 31, 2024, is renewable for an additional 6 terms. No depreciation has been recorded yet on the leasehold improvements for 2018. So for our adjusting entries in number 7, letter A, debit land, building, and other income 1,864,000, 7,606,000, and 30,000. On the credit side, land and building 8,600,000, marketing and administrative expense 900,000. So for letter B, marketing and administrative expense 166,800. And for the credit side, accumulated depreciation, building, accumulated depreciation, leasehold improvements 150,000 and 116,800. So number 8, a franchise agreement was acquired at the beginning of 2018 for 500,000. No amortization has been recorded for 2018. A 10-year amortization period is to be used. So for our journal entry is debit marketing and administrative expense 50,000, and the credit side accumulated amortization franchise 50,000. Number 9, the company's licensing agreement account has a balance of 216,000. Original amount was 360,000 and is being amortized on a 5-year basis starting on January 2016. As of year-end, amortization has not been recorded. So our journal entry is debit marketing and administrative expense 72,000 and licensing agreement 144,000. So accumulated amortization on licensing agreement is 216,000. Number 10, you were furnished with a schedule of accounts payable and accrued expense as of December 31, 2018. Your verification disclosed the following. A. Payment to the loan company. A supplier amounting to 126 was erroneously debited to the account of the Leon Corporation, another supplier. The following the following unpaid vouchers have not been recorded as of year end. 1. Light, telephone, and water bills for December totaling 22,800. 2. Property taxes for the last quarter of 2018 due on the first week of January 2019, 100,000 pesos. And 3. Various payroll taxes, 18,000 pesos. So for our journal entry is letter A, accounts payable, debit side on De La Cruz 126,000 and credit side, accounts payable De Leon 126,000 pesos. Letter B, debit marketing and administrative expense 140,800, and on the credit side, accrued expense 140,800. Number 11, rent was received from a tenant in December 2018. The amount of 130,000 was recorded as income at that time, even though the rental pertains to 2019. So our adjusting entries for number 11 is debit other income 130,000 pesos and unearned revenue 130,000 on the credit side. So number 12, the mortgage on land and building assumed by the company is payable in installment of 500,000 pesos every January 1 starting January 1, 2019. Interest of 20,000 per annum is payable semi-annually every January 1 and July 1. So our journal entry for number 12 is interest expense debit 200,000 pesos and interest payable credit 200,000 pesos. Mortgage payable debit 500,000 pesos and current portion of long-term debt credit 500,000 pesos. So for number 13, the bonds payable represented a 9%, 2 million face value bonds which were issued on January 1, 2014 to yield 10%. Interest is payable annually on January 1. No interest accrual nor bonds discount amortization was recorded during 2018. So journal entry is debit interest expense 187,800 pesos and debit interest payable 180,000 and discount on bonds payable 7,800. So for the last item for the adjusting entries is number 14, the company is subject to 30% income tax rate. So our journal entries for number 14 is debit income tax payable 127,126 pesos and credit income tax expense 127,126. Okay, now let's proceed to requirement number 2, trial balance. So instructions: prepare a list of audit adjusting entries. Number 2, prepare a one section trial balance with the columnar headings exemplified below. So trial balance, adjustments, profit or loss, and financial position. So let's first start with a trial balance. Account title, petty cash fund. On the debit side, what we are seeing here are the unadjusted. So 15,000. Cash in bank 243,600. Trading securities 330,000. Accounts receivable 3,544,000. Allowance for uncollectible accounts 120,000. Credit on the credit side. So inventories 4,398,900. Prepaid insurance 29,400. Property, plant and equipment at cost 10,945,000. Accumulated depreciation, the debit side 703,500. Franchises 500,000. Licensing agreement 216,000. Accounts payable on the credit side 2,141,550. Accrued expense 598,000 and 20 pesos. So income taxes payable 193,365. Dividends payable 1,250,000. Mortgage payable 2 million. Bonds payable 2 million. Discount on bonds payable debit 122,000. So, ordinary share capital 5 million, credit side, additional paid in capital 1,350,000. Retained earnings January 1, 2018, 2,867,840, and sales 32,250,000. Cost of goods sold debit side 18,169,950. Marketing and administrative expenses 8,900,400. Other income 180,000 on the credit side, and interest expense on the debit side 404,320. Income tax expense 1,585,705. Dividends declared 1,250,000. And the total for debit side is 50,654,275, as well as on the credit side 50,654,275. Okay, now let's go on the adjustments. What we did in the first part, the adjusting entries, we're putting it here in the trial balance. So number one, okay, let's start with the cash fund 7,500. On the credit side, cash in bank 53,300. Trading securities 20,000. Accounts receivable on the credit side 786,000. Allowance for uncollectible accounts 17,900. Prepaid insurance on the credit side 6,250. And licensing agreement on the debit side 144,000. Accounts payable on credit side 62,650. Interest payable 380,000. Accrued expenses 140,800. Unearned revenues 130,000. And income taxes payable debit 127,126. Current portion of long-term debt credit side 500,000 pesos. Mortgage payable debit side 500,000. And discount on bonds payable credit side 7,800. So adjustments on sales debit 661,000. Adjustment on cost of goods sold credit 563,650. Marketing and administrative expenses credit 441,750. Other income 160 pesos on debit side, and interest expense 387,800. Income tax expense is 127,126. Unrealized gain on trading securities 20,000 credit side. Land 1,720,000 on the debit side, and building 7,750,000. Land and building on the credit side 8,600,000, and accumulated depreciation building 150,000. Accumulated depreciation leasehold improvements 16,800. Accumulated amortization franchise 50,000. Accumulated amortization licensing agreement 216,000. Accounts payable De La Cruz on the debit side 126,000. Accounts payable De Leon on the credit side 126,000. Total on the adjustments is 12,350,226 on debit side, as well as on the credit side 12,350,226. Now let's proceed to profit or loss. The credit side of profit or loss, we have sales 31,589,000 and cost of goods sold 17,606,300 pesos on the debit side, and marketing and administrative expenses 8,458,650, and other income 20,000, interest expense debit 792,120, and income tax expense 1,458,579. Unrealized gain on trading securities 20,000. And we have the partial total of debit side on profit or loss is 28,315,649, and on the partial total of credit side is 31,629 pesos. So after that, we will deduct the income before tax, which is 3,313,351, and that gives us the total of 31,629,000 on the debit side and on the credit side. So after that, we calculate the income before income tax, and then income tax expense 994,005 pesos and 30 cents, and we simply deduct, and we have a profit of 2,319,345 and 70 cents. Okay, now let's proceed to the last, which is the financial position. We have petty cash fund 7,500, cash in bank 296,900, trading securities 350,000, accounts receivable 2,758,000, allowance for uncollectible accounts 137,900, advances to officers and employees 123,000, and we have inventories for 4,976,900, prepaid insurance 23,150, property, plant and equipment at cost 10,945,000, accumulated depreciation 703,500, franchises 500,000, licensing agreement 360,000, accounts payable 2,204,200, interest payable 380,000, accrued expenses 738,820, and earned revenues 130,000, income taxes payable 66,239, dividends payable 1,250,000, current portion of long-term debt, term debt 500,000 pesos, mortgage payable 1,500,000 pesos, bonds payable 2 million, discount on bonds payable 114,200, ordinary share capital 5 million, additional paid in capital 1,350,000, retained earnings January 1, 2018 2,867,840, and dividends declared 1,250,000, land 1,720,000, buildings 7,750,000, land and building 8,600,000, accumulated depreciation building 150,000, accumulated depreciation leasehold improvement 16,800, accumulated amortization franchise 50,000. Accumulated amortization licensing agreement 216,000. Accounts payable debit 126,000 for De La Cruz. Accounts payable credit 126,000 for De Leon. Partial total on the debit side 31,300,650, and on the credit side 27,987,299. We move the income tax expense 994,000 5 pesos and 30 cents, and a profit of 2,319,345 pesos and 70 cents, and that gives us a total of 31,300,650 pesos, and on the debit side 31,300,650 pesos. Okay, now for the last part of our requirements, number 3, computation. So compute the correct balance of the following. So number 1, petty cash fund. So initial balance 15,000, less adjustments 7,500. So our final balance for petty cash fund is 7,500 pesos. So number 2, cash in bank. Initial balance 243,600. Add accumulated adjustments 53,300. Final balance 296,900. So number 3, trading securities. Initial balance 330,000. Add accumulated adjustments 20,000. Final balance 350,000. So number 4, accounts receivable. So initial balance for our accounts receivable is 3,554,000. Less accumulated adjustments 786,000, and final balance for accounts receivable is 2,758,000. Number 5, allowance for doubtful accounts. Initial balance is 120,000. Add accumulated adjustments 17,900. Final balance for our allowance for doubtful accounts is 137,900. So number 6, advances from officers and employees. Initial balance 0. Add accumulated adjustments 123,000. Final balance for advances from officers and employees 123,000. Number 7, inventories. Beginning inventory January 1, 2018 4,398,900. Add accumulated adjustments 578,000. Ending inventory 4,976,900. So number 8, prepaid insurance. Initial balance 29,400. Less accumulated adjustments 6,250,000. Final balance for prepaid insurance 23,150. Number 9, land. Initial balance of land and building 8,600,000. Multiply by 20%, part designated to land 0.20. Final balance for land is 1,720,000. Number 10, building. Initial balance of land and building 8,600,000. Multiply by 80%, part designated to building, total 6,880,000. So and add remodeling cost 900,000, less scrap income 30,000. So our final balance of building 7,750,000. So accumulated depreciation building. Initial balance 0, add accumulated depreciation for building 150,000. Final balance for building accumulated depreciation for building is 150,000. Number 12, carrying amount of leasehold improvements. Initial balance leasehold improvements 168,000. Less accumulated depreciation leasehold improvements 16,800. Carrying value leasehold improvements final balance is 151,200. Number 13, franchises. Initial balance 500,000 pesos less accumulated amortization 50,000. Carrying amount franchise 450,000. 14, carrying amount of licensing agreement. Licensing agreements 360,000 less accumulated amortization. Licensing agreements 216. Carrying value for licensing agreements 144,000. 15, accounts payable. Initial balance is 2,141,550. Add accumulated adjustments 62,650. Final balance for accounts payable 2,204,200. 16 is accrued operating expenses. Initial balance 598,020. Add accumulated adjustments 140,800. Final balance for accrued operating expenses 738,820. Unearned revenues. Initial balance 0. Add accumulated adjustments 130,000. Final balance 130,000. Number 18, interest payable. Initial balance 0. Add accumulated adjustments 380,000. Final balance 380,000. Number 19, income tax payable. Initial balance 193,365. Less accumulated adjustments 127,126. Final balance for income tax payable 66,239. Number 20, dividends payable. Initial balance 0. Add accumulated adjustments 1,250,000. Final balance for dividends payable is 1,250,000. 21, current portion of long-term debt. Number 1, initial balance 0. Unaccumulated adjustments 500,000. Final balance 500,000. 22, discount on bonds payable. Initial balance 122,000 less accumulated adjustments 7,800. Final balance on discount on bonds payable 114,200. 24, 23, ordinary share capital 5 million. 24, retained earnings 2,867,840. Sales 25, sales. Initial balance 32,250 less accumulated adjustments 661,000. Final balance for sales 31,589,000. 26, cost of goods sold. Initial balance 18,169,950 less accumulated depreciation 563,650. Final balance for cost of goods sold 17,606,300. Marketing and administration expense. Initial balance 8,900,400 less accumulated depreciation 441,750. Final balance is 8,458,650. 28, other income. Initial balance 180,000 less accumulated adjustments 160,000. Final balance for other income 20,000. 29, interest expense. Initial balance 4,320 pesos. Add accumulated adjustments 387,800. Final balance interest expense 792,120. So for profit, we have sales of 31,589,000. Cost of goods sold less cost of goods sold 17,606,300. Our gross profit is 13,982,700, and other income 20,000, and there's gain 20,000. That gives us total income of 14,022,700. Less marketing and administrative expense 8,458,650. Income before interest and taxes 5,564,050. Interest expense 7 million 792,120. So our profit before tax is 4,771,930. And initial income tax expense less is 1,458,579. Income before tax is 3,313,351, and our income less income tax expense is 994,005 pesos and 30 cents, and that gives us a profit of 2,319,345 pesos and 7 cents. So that's all for the discussion for the answers of Carkits Corporation. Have a good day. Thank you and goodbye.